It's time for a discussion segment, and today we'll be looking at the implications of the latest developments in Nigeria's energy sector. By that I mean the price war, which we discussed yesterday in our phone-in segment. And like we said, in a surprise move, Dangote Refinery recently reduced its gantry price from 890 naira to 825 naira per litre, which had a 65 naira reduction, while the NNPC followed suit and slashed the price of premium motor spirits from 920 naira to 875 naira per litre. The reduction in petrol prices has sparked a heated debate about the potential impact in Nigeria's economy, particularly in the energy sector. Will this move lead to a decrease in the cost of living for Nigerians, or will it have unintended consequences on the economy? Is this a good move at this point in time? Who stands to benefit the most? Is there more to it than meets the eye, especially holding to the fact that it looks like the price of petroleum could never have come down, but this is what is playing out? What does this competition mean for the energy sector and the petroleum market at this point in time? Now, to help us unpack the implication and make meaning, make near meaning to all that is playing out in the energy sector, we're joined via Zoom by Steve Nwachukwu, a renowned economist, financial analyst, and a lead researcher at Steward Asset Management Limited. Thank you so much for joining us.
Thank you for having me. Good morning.
Good morning. All right, let's just, what do you make of this whole price war, from the NNPC to Dangote, then to the NNPC, when it looked like, the cost of petroleum would keep going up and would probably not come down, with how they always talk about the global market and the regulations and all whatnot. But with the move by Dangote, we saw the NNPC immediately react. What did you make of it?
Possibly there are two ways to look at it. First, from the first party perspective, is the fallout or play out fundamental realities around the price of crude oil and the international selling price. Remember that crude have went down from somewhere around $82 to a current position of $75 or $76. So it's cost reflective in the sense that price of crude, which is the determinant factor of this petroleum product, once it goes down, price of this petroleum product or byproduct of crude is expected to also address. Then the second perspective is to look at it from the point of healthy competition from the industrial players, big industrial players, the likes of Dangote and NNPC and other major marketers who want to assert some level of dominance in our local market. So it's healthy from that perspective that yes, the key industrial players are trying to outsmart one another, are playing out with whatever variables and advantages they have to push for a better price, to push for a better dominance, and it's healthy for our economy. Yes, it's the citizens that will actually receive the best part of it, which is the price reduction that we witness. Like I said again, the two perspectives can surface. One is that the fallout fundamental realities around the price of crude oil, international selling price of crude oil, which have gone down from somewhere above $84 per barrel to a current position as at this morning is around $75 to $76 per barrel. So that is particularly what have resulted in this very price of this petroleum product. Yes, the local industrial players who want to take advantage of that, to take dominance and to, displace other competitors in the local market. Is healthy. We need something even much better, lower around 600 to 500. That is what Nigeria deserves.
All right.
Thank you.
But how sustainable do you see this? How sustainable could it be? And do you foresee a compromise or a shortage in supply due to this?
Well, the truth remains that we need some level of compromise. Definitely we need a level of compromise, and we also need some level of sustainable price model for our sale of petroleum products in our local markets. Sustainable price model. We should not subject the price to the international selling price of crude. there should be a model that should suffer for the local market. The truth remains that Nigeria is peculiar, and we should apply policies and programs of government that is peculiar to Nigeria. You cannot subject the local market, the Nigerian market, which is a developing economy, to the international playing standard. When sometimes people make arguments of using the international selling price of crude to be the fallout or play out of what should be the reality price around this byproduct of crude, the PMS, the aviation fuel, the kerosene, and the rest of them. One will say we are not being realistic, we are not being honest, we are not also being considerate of an economy that we are practicing, a developing economy, an economy that is so fragile that needs some level of support for its sustainability. So like I said again, there should be a model that is peculiar to us, a model that takes cognizance of the realities. Fortunately for us, we have crude in abundance. We have over 37 billion barrels of crude reserves, and we have close to 206 trillion cubic feet of gas. These are all in our advantage. We should maximize it and put programs and policies of government that could see this very petroleum byproduct relatively better price for the citizen, not subjecting us to the international best practice in the case of petroleum product. That is not a model that should suffer for Nigeria, and that is not a model that will be competitive enough to make a healthier economic and broad growth for our economy. So,
Okay.
healthier economy.
All right.
Thank you.
Sustainability is very important and is key to all of this. But let's talk about importers. We remember when Dangote refinery came on board, and there was that clamor and excitement that importation is going to improve and it will see us less dependent on foreign petroleum products, landing costs, and all of that. But we see obviously importation is still taking place. What do you foresee as the impact this would have on them, given the fact that landing cost is still quite high? And you clear and have that landing cost paid, and you come in to sell at a lesser price than what you paid for. So where does this leave the importers? What do you see? Do you foresee this kicking them out of the markets?
Well, gradually, the development will be that it will be very difficult for some of these importers of petroleum products who has licenses to import to actually play in our local market. Remember, you can't take away the advantages of local content. Like I said again, we have the reserves, we have the crude here, and if we can have refinery that is functional like Dangote refinery with over 650,000 barrel capacity, and with Port Harcourt 60,000 Warren refinery and combined combination, I think we have more than 8 to 850,000 barrels refining capacity. Definitely they will displace importation of these very petroleum products when the time goes on. Again, the importers of this very petroleum product are still leveraging on some of their foreign partners who perhaps also kind of trying to have that dominance. It is believed that they are also in one way or the other finding ways to subsidize their price, in the sense that they need the local market, they need Nigerian market with population over 230 million. Such a huge market needs to be maintained, so they can sacrifice for now to gain tomorrow. So there is level of subsidy. Perhaps the markup prices for those importers, most of the refineries that they are partnering with are trying to, so that their landing costs will be more cheaper. Their landing costs can be competitive to the local refinery. Again, let me repeat it again, it's still a challenge to Dangote. Dangote have all it takes to displace most of these very importers of this petroleum product, because Dangote has one of the brand newest refinery that the optimization of efficiency is close to 95-98%, and that is what is the key in the petroleum or refining of petroleum product. Once you can optimize your efficiency in production line, to close to 95 to 98 because of the brand new and virgin refinery. Dangote can actually displace all of these competitors in this very field. So we still call on Dangote to take dominance of the market, the healthier dominance, like I said again, not the dominance that will take him to monopolize the system or monopolize the market, but dominance that will see a relative better price for Nigeria. Price within a 500 to 600 will be relatively better for Nigeria, given the fact that we've once bought this product above 950, 1,000 and 1,001, depending your location. So definitely the local importers of these very petroleum products will find it difficult in days ahead to operate, given the fact that these very refineries are optimizing, and given the fact that the key components of the BIA, that is the Petroleum Industrial Act, give that very leverage, give that very opportunities for local refineries to have first-hand supply of this very raw material, which is the crude. Once they can have it in a model that is quite relatively okay, like the model that we are trying to introduce, like I said again, there should be a model for our local content, for our local product. I love what President Tinubu did in the model that he introduced for crude for Naira. That's the model that should suffer for Nigeria. You don't subject it to international price or international exchange currency, which is dollar. You said crude for Naira. The same model can be applied in crude for the price of crude, and even the facilitation of the refinery. Like I said earlier, we have close to 206 trillion cubic feet of gas. Nothing stops federal government saying the cost component of refinery is powering your gas plant. Can we supply gas at so rates to you, so that it can reduce the refining cost of your petroleum, so Nigerians can have a better price? These are all models that could support the local economy.
All right.
Thank you.
All right. Thank you for throwing light on that. Now, we know one thing is certain: Dangote is a businessman, and this price reduction saw a competition that favored Nigerians. With this price reduction and all that, the tendency of what could play out in the petroleum sector in a couple of years, do you see more people like the likes of Dangote taking interest in investing in petroleum or investing in refineries, say the Otedolas and the Alakijes, the big names in Africa and Nigeria who have the ability to have what Dangote has? Do you see such competition coming on board as well? And if it does, what benefit will Nigerians gain from that?
Of course, that's the essence of the PIA. The PIA is a fertile ground for higher and healthy competition. And for me, that is why we have to protect the local regulatory bodies, like the upstream and middle stream, up and downstream sector regulators. So we need to protect such institutions so that they can keep and observe the regulatory provisions, so that there won't be some level of dominance that would totally disencourage other local refineries or other entrepreneurs that wish to endeavor into this very space. Yes, like I said again, the PIA is a fertile ground for any entrepreneur, businessman, both international, to invest in the refining sector of our oil and gas sector. It is fertile, and a good number of them are actually in. We have the one that is being done by BUA, is coming on stream, I think, in 2028. Probably 2028 it will come on stream with over 250,000 barrels. We have the water smith of over 50 or 70,000 barrels. Currently, they are at 20,000 modular refinery capacity, and they are intending to hit about 70 to 80,000 barrels. So such developments, such entrepreneurs, such businesses or such ventures are all welcome, and is only being empowered by this very PIA and the regulators in the up and downstream need to be making sure that the rules are obeyed, the rules are observed, so that it can be healthier, it can be highly competitive, and we can also make use of the local advantages or comparative advantage we have over other countries to encourage more investment. Take, for instance, the likes of South Korea has more than 3 functional refineries without a single drop of crude oil. South Korea has 3 functional refineries and they don't have a single drop of crude oil. Why Nigeria, with over 37 billion reserve capacity, and we don't still have a functional refineries that can supply the likes of the markets in the Asia, in the Latin America, and other West African and African countries. So we need such healthier competition where we can actually have other entrepreneurs and businesses developing refineries that will target other markets around the globe, not just for the local consumption, but we can have refineries that can operate in our shores, create employment for our people, and export this very product to other markets in Europe, in Latin America, and the rest of Asia. So I think we need it, and all we need is to keep those functional components of the PIA, the Petroleum Industrial Act, functional, where we need to also to amend it to give more powers, to give more opportunity to such entrepreneurs and businesses, both local and foreign investors. We need to tinker with the law so that we can have a healthier and highly competitive market or environment for such industrial operators to function optimally.
And in line with that, you made mention of sustainability in terms of prices, in such a way that the prices should be to favor Nigerians and not in with the international standard, because we are using naira and not dollars. But let's talk about regulatory oversight. Now, what kind of regulation do you think should be put in place in such a way that the prices would benefit the consumers, which is Nigerians, and also not make the competitors run out of businesses or run at a loss? Now, what regulatory oversight could function both ways to favor both parties, see a fair price for Nigerians, and see a smooth cost of running business for investors who are looking forward to coming into the sector, and the likes of Dangote who are already in the sector at the moment?
Have in mind, thank you so much. Have in mind that the best model or international practice is the flotation model, where you allow the fundamental call out or play out of force of demand and supplies to determine the price. Remember in my intro, I said there are 2 perspectives to the current same price war that is going on. First is the fundamental play out from the price of this very from the price of the crude oil, internationally selling price of crude oil, to that of those who wants to take dominance of the market. PIA created that opportunity for such a healthy competition within the local market, in the sense that there is no longer subsidy. The demand and supply determines the price. And the fundamental realities I talked about is the international selling price of crude. If tomorrow crude goes back to $80, $85 to $90, expect the petroleum byproduct or the petroleum products to hit above 900 to 1,000 again. Now we are enjoying relative peace because we are witnessing a price reduction in this very crude oil from somewhere above $82, $83 per barrel to a current position of $75 to $76, even a threat to our national budget, given the fact that the budget benchmark is around $75 per barrel. So I think that is the point. The sustainability is anchored around the fallout play out fundamental realities around this very international selling price of this very crude oil. Like I said, that is not the model that Nigerians should face or Nigerians should wait for. We should have a model that is peculiar for us, a model that seems not accurately subsidizing this very petroleum product or subsidizing the price of this very crude oil. Perhaps a model that gives some level of policy advantage to local players, given the fact that you can say for sure, like I said earlier, you can say refining product, the cost input from the generation of electricity, I can supply gas free of charge for you. And this is your plant. What is the capacity of a plant, and what is the maximum use or maximum demand of gas to power your turbines? You take away that cost input from the refinery, and that will have a resultant effect on the output cost, the S-depot price of this very petroleum product. So these are the models that we need that can be sustainable, not the model that is subject or hopes on the international selling price of crude. If it goes back up, it's not sustainable. The price will also dress up. But we need a model that could actually saw a price reduction to somewhere around 500, and that model can only be processed or can only be offered by the federal government, not the private players.
All right. Now, in line with this, now we've seen several attempts to move Nigeria and move Nigeria energy transition to alternative sources of energy. We're seeing CNG, gas-powered vehicles. With this price reduction, or a slight light at the end of the tunnel when it comes to the cost of petrol prices, and this price war going on, do you see this holding back our energy transition process?
Well, it shouldn't be. Like I said again, some of these models should be a dedicated policy of government, and they should pursue it irrespective of the fallout or play out of other sectors or other competitive models that perhaps that may suggest that yes, we have relatively cheaper petroleum price. Should it deter us from pursuing the policies around the CNG alternate to gas and petroleum products? No, we should also pursue this very policy and programs of government to say that we have alternative, or to say that we also grow those sectors and have a kind of free price from the price fluctuation, from the price volatility that we witnessed in the petroleum sector. The other energy sources are more sustainable than the petroleum products. They are more relatively better, environmental friendly, and the rest of it. And we should not, because we are seeing a reduction in the petroleum price, defer our pursuit or defer our quest to grow these very sectors. Like other countries, like India has close to 5 to 4% of such alternate measures to petroleum product. The CNGs, the usage is close to about 2 to 4%. Nigeria should also attempt to have something above 2 to 3 or 4% of our motorcades being converted to CNG.
Quickly now, before we go, I would also want you to align your thoughts with the idea of diversifying the economy. We've seen the government come out severally to talk about diversifying the economy to other sectors, like the alternative energy supply, agriculture, entrepreneurship. With this price war going on and the light we're seeing that might most likely see a decrease in petrol prices, do you also see this hindering that dream of diversifying the Nigerian economy, or will still go back to being oil dependent because there's a lot of players in the industry at this point in time?
Well, diversification of our economy or diversification of revenue sources has nothing to do with the price war. It's a total different thing. The prices of these very petroleum products are for the market prices, but revenue of government is not subject to this very price war. NNPC has little or much that's in their retail, which is this very petroleum product section or outlets, to do with the revenue of the government. The revenue of government, the bulk of their revenue is from the sales proceeds of crude, and which has nothing to do with the byproduct of these very petroleum products, the PMS, the kerosene and aviation fuel, which has a different connotation on the revenue of the federal government. But the quest to diversify the economy should be pursued given the fact that we need multiple sources of income. We need to grow our income. As we speak, the federal government recently signed a 54.9 trillion size of budget, and 65% of that revenue is expected to come from the oil. And if we are still expecting 65% of revenue from oil, it means that we are still oil dependent economy. We are still hoping to raise revenue from the crude oil. And so definitely we need to diversify and make sure that other sources that can create a bigger economy, create revenue for government, is being encouraged. It's a shame that we are still expecting close to 65% of revenue to fund government policies and government programs from the sales proceeds of crude oil. And today it's being challenged by the current selling price of crude down to about $75 per barrel. And we project the same $75 per barrel, it seems like it's a threat to the budget. So we need to encourage diversification and have other sources that can raise revenue for government so that we can sustain whatever fiscal programs and projects we have contained in the national budget.
All right.
Thank you.
Thank you so much. Thank you so much, Steve Nwachukwu, for always joining us and making out the time to, inform educate our listeners and unpack most of these policies that seem quite cumbersome for people to get to understand or relate with. We appreciate your presence on the show this morning. Thank you so much.
Always my pleasure. Thank you.
And to our listeners out there, I hope you've been able to pick something from our discussion this morning. A lot was said. I enjoyed the conversation, and I hope you did too. I hope we've answered certain questions you had regarding the price war stemming from yesterday up until today.